Today we have Aapl, our calendar second quarter, which is their third quarter. So the sales surprised us. We were expecting negative growth. The sales were up 11%, and that's 10% from the products, 15% growth from the services. So the trend has been faster growth from the services. You can see how seasonal it is. So growth in this quarter is not so significant. Of course, the fourth quarter is the all-important one with the launch of all the new products. We see small, slightly positive sales growth over the next 12 months. So in terms of cash flow was also a bit ahead of our forecast, 11.5 versus our 10.3, the free cash flow. The 12 months is at 71, so that's come quite a way down from the 25 because the positive investment cash flow has become less positive, so it's going to be a bit difficult for them to get back up there. And because of that, we see the cash flow a little bit lower to 65.5 billion in the next 12 months, which would look like that. So not at the 100 billion level. The net debt has been coming down, so it ramped up into 2017, almost 100 billion. Now it's come down to 79, although it's increased in the recent quarters because of the payouts, buybacks and dividends. So we're still assuming quite big, almost 60 billion payouts, but we see the net debt coming down to 71 billion. So there's been a trend since 2017 of declining debt, perhaps as the sales growth has slowed down. They used the debt to grow in 2016, 17, 18, but now the growth has slowed a bit. The debt's coming down, and we assume it's going to be paid down further. The profit was higher than a year ago, as depreciation was lower. But the cash cost ratio has actually been increasing a bit. The 12-month average is at 72 still, so we use that 72, and that gives us quite a big jump in net profit. That's double-digit 11%. So this is the free cash flow, assuming that investment is negative, we shall see, and flattish sales growth. But if we use our 1.6% valuations, the yield is about 3.5%. So even at this level, 1.7 billion market cap, it still looks pretty cheap, and that with a 50% discount because of the debt, it still gives us a higher 470 target price.